Thank you very much. Thank you all for being here. So I usually like to get a sense of how many people are familiar with Lean Startup. I mentioned the previous presenter mentioned that. With a show of hands, how many of you have heard of the term Lean Startup or are familiar? Okay, about 30%, which is always the magic number. And how many of you are working in a big company right now? Okay. How many of you are in a startup? All right. And I'll assume the rest of you are working on products and interested in this topic of innovation. So I'll give a little bit of background on myself. So just by way of introduction, I like to say that first and foremost, I'm an entrepreneur. I've got sucked into the lean startup world, which I'll describe here in a second. I've written a book, which I'll talk about just in passing. But first and foremost, I'm an entrepreneur. So I hate to start this keynote with bad news, but this is the sad reality, is that most products fail, most startups in general fail. And that's just the statistic that we are all somewhat familiar with already. But this number is actually more interesting than the failure rate, and that is that 2/3 of the companies, 2/3 of the entrepreneurs that actually succeed do so by drastically changing their plans along the way. So what they start out with is not where they end. Now, if you think about that, what tells us is that the success is not driven by finding that perfect plan or that perfect business model, but iterating from a plan A, which is where you start out, to a plan that works. And the key part here is doing this without running out of resources. And that's what fundamentally being a lean startup is about. So we'll walk through what the methodology is really, what it really encompasses, but that is the key message here, is we want to go from the initial plan, which is going to change, to one that works before running out of resources, which is the real enemy that we face. So I'm going to take a step back and talk about why building products, why innovation in general is hard. A lot of this initially came out of Silicon Valley, the lean startup methodology itself. It got packaged. Its roots go back all the way to the Toyota production system in lean manufacturing, lean thinking. So it's really a synthesis of a lot of different ideas, both entrepreneurial from way back in time, from manufacturing, from high tech, from low tech. And what I'll show you today is really a packaging of how it's being applied, and it's even though it started out in the software high-tech world, it has kind of grown and is being applied in startups as well as big companies and enterprises, Fortune 500 companies. So I'd be happy to talk about case studies later on. So one of the first reasons that I attribute to startups being hard or new product innovation being hard is that as entrepreneurs, all of us, and it's not just some of us, but all of us are in love with the solution. We look at our solution and we fall in love with the technology, we fall in love with the how we're going to solve the problem, rather than taking a step back and looking at the overall business model, the overall problem. So that's the first reason, and that's the myth of the visionary entrepreneur. We all want to be visionary, but it's the vision is not enough, and so we'll talk about that. The second point, and this is a little counterintuitive, is that building products actually gets in the way of doing innovation, of learning. And the reason for that is that if you look at a traditional product development cycle, there's some learning in the beginning. So we all go out and we understand or try to understand what customers want. We then go and spend some time in the middle where we are building and testing product, improving quality, and then we release it out to customers, and that's where the real learning happens. This big middle is where we spend weeks, sometimes years, building and perfecting our product. But that's also where we go astray. We either spend time building the wrong features, or we build too much of the product only to find out when we launch that we have not captured the market. We've built something that nobody really wanted or not enough people wanted. So what we want to do is avoid that big middle. Rather than going away for weeks and months, sometimes years, we want to be able to shorten that cycle so we can be interacting and build a continuous feedback loop with our customers while we're building the products. The third reason why innovation is hard is we all pay lip service to this, is we need to listen to customers. Customers are always right, things like that. But it's more important to know how. So when I talk to many entrepreneurs, they just frankly tell me I've stopped talking to customers because they don't tell me anything useful. And they will cite this Henry Ford quote. Had he gone and talked to customers, they wouldn't have told him to mass produce the automobile. They would have said, build me a faster horse. What we fail to understand is that the customer's job is not to build the solution. The customer's job is to articulate their pains, their worldview. It's the entrepreneur's job, which is best captured by Steve Jobs. It's not the customer's job to know what they want. That's really all your jobs. the customer can really explain, again, their current reality and what they wanted. In that previous quote, they were saying their current solution, their current existing alternative is a horse. It's not fast enough. They want something better. Had Henry Ford gotten into genetic engineering at the time, that might have been a possible solution. But he instead decided to go and mass produce the automobile, which was, in that time, the faster horse. So that's kind of the key message here, is that that's not really the customer's job. So we have to know how to interact with customers. Now, the second thing that keeps us up at night, once we have this solution that we want to go build, what I like to call awesome, we stay up at night trying to figure out how to fund this, how to find the appropriate runway for our idea. And so we turn to people with bags of money. And if you've ever done a pitch, you'll see most entrepreneurs, again, talk about the solution endlessly, but the investors aren't really that concerned or care that much about the solution. So what investors are really looking for, they're in this for one reason and one reason alone, and that's to get a return on their investment. So they're giving you money, and the way that works is that after X amount of time, you give them a lot more money back. So they're really looking at your product or service through different lenses, and I want to talk about that a little bit. So what they really look at first and foremost is traction. So show me evidence that anyone other than yourself and maybe your team and your friends cares about this idea. Ideally, show me paying customers, show me market engagement, show me some kind of other metrics that makes me believe that there's something here. If you can pass that initial test, then they want to know how you're going to scale this business model. So what is the intersection of your cost structure and your revenue stream, where the margins come out? How is this a scalable business model versus a small product that maybe 10 people want? If you pass that, then they want to know not necessarily who your customers are, but how many are they? So how big is this problem? What is the market size? And finally, how are you going to defend against competition? So assuming you go and build this great product or service, what's keeping someone from copying you and taking over the market share away from you? So those are the kinds of things they would ask. And the thing that gets their attention first and foremost, that's a conversation starter, is traction. If you walk into an investor's office with a hockey stick curve that's starting to take off, no matter what you're doing, they will sit you down and want to learn more. So that's usually what gets the initial conversation going. If we turn to the other side, so if you talk about what traction really is, it's engagement with customers. So instead of trying to raise big bags of money, why don't we find customers and find that early traction so we have evidence to then go talk to investors? Customers also don't care about our solution. They don't wake up one day saying, I want to use a product because it was built with a particular technology. They aren't in love with the solution. Customers have problems, and they want those problems solved. So they're not in love with problems, but what we can do, which is even better, is tell them we understand who you are, we know you have problems, we have a solution for you, and the intersection of the problem and the solution box is where we get the value proposition or promise. So it's making a big, bold promise that gets the customer's attention. Now, the way to make the message be stronger is by really understanding who your customers are and by narrowing down. When we try to market to everyone, if you try to go mainstream too early, if you're familiar with Jeffrey Moore's Crossing the Chasm, you can't just jump to the mainstream market. You have to narrowly start segmenting and start with early adopters. So even Facebook, which is an example I always like to give, now is used by practically everyone or every customer segment type in the world. But they started out with a very, very narrow customer segment, which was a Harvard student on campus. And even once they conquered Harvard, they were very methodical in how they moved from school to school and then companies and then to everyone. So that kind of narrow focus helped them really understand their customer and build a product that was targeted and differentiated just for them. So that's a very important step. Now, if you get those two things right, you have a strong promise and you're identifying with the customers correctly. The only questions customers have is how much does this cost or what do you want in exchange? So I use the word currency because sometimes it's physical money, so you might provide value. And as long as you're charging anything less than the value you deliver, that's somewhat a fair deal. Typically, we'd offer something at a discounted value. But there's also derivative forms of currency. So it may not always be a cash transaction. If you have a multi-sided market or a marketplace business, you might be building assets in different ways, and that's the concept of the derivative currency. So Facebook, for example, doesn't charge you and I to use the service, but through our participation, we build an asset that they then trade with advertisers as a derivative form of currency. So you can actually put value on participation and those other things as well, which I recommend you do when you're considering your business model. Now, when customers look at this, the thing that gets their attention first and foremost is going to be the promise. That's the conversation starter. So as consumers, we are bombarded with offers all day long, and we have learned to tune them out. That's why traditional broadcast advertising doesn't work as effectively. But if you can get the attention of the customer, you're opening a permission window where you can then lead with other parts of your solution, maybe benefits, maybe pricing, other things. But the first obstacle we all have is how to break away and from the pack and lead with that promise. Now, the reason I'm showing you all this in this talk is I'm trying to redefine the job of the entrepreneur. So the entrepreneur traditionally looks at that canvas this way. This is what they see. This is the awesome product I want to go build. If I build this great thing, the business model will correct itself. Good things will happen automatically. Having built products many years myself, I know that doesn't always automatically happen. Sometimes you do hit the time. Sometimes products are timed correctly, but that's a rare instance. You have to do a lot of work to make that business model work. So I challenge entrepreneurs to redefine the true job of what the true product that they're building. It's not really just the solution. We have to turn that solution into a question mark, which is what the lean startup begins to highlight with concepts of the minimum viable product and iterations after that, and I'll touch on that a little bit. But here I want to highlight that the solution is not the true product. It's actually getting this entire business model, so getting a working business model that is the real goal of the entrepreneur. And the way that we do this is by systematically de-risking that vision. So we have got a business model. At hand. At that point, a lot of question marks. It's not really a done deal. There's a lot of hypotheses, lots of guesses on there. So we have to systematically de-risk that business model until we get one that works. And the way we do it is through a series of conversations. So we have conversations with customers, and there's a whole way of doing those kinds of things as a way to extract problem definitions from customers, as a way to test solutions without having to build or write a single line of code, use demos and prototypes. Those are all some of the techniques we talk about. There's a whole level of conversations we have with teams and advisors. So the Lean Startup gives you a vocabulary where we can now use something called innovation accounting. So in the past, we would use financial accounting to measure the success of well-established companies. But for many early innovations, revenue doesn't come immediately. It's probably weeks, months, sometimes even years into the future. But we can use other metrics to talk about whether the innovation is working or not. So there's a whole language that we can use for those conversations. When investors get into the picture, again, I showed you what they really look for is things about traction, again, metrics, things we can talk about there. We also have conversations with competitors. I put this one at the end because I find too many entrepreneurs think they know who their competition is, and they start to pay attention to them too early and sometimes mimic them or kill their ideas because of that, which I think is unfortunate and a big mistake. So that strategy is predicated on the fact that we think the competitors have a clue. But in reality, sometimes the competitors are as clueless as we are, and so if we both just follow each other, we don't capture any market. We both just drive off the cliff at 100 miles an hour. So I really put that at the end because you should really focus on your customers first and let your customers help define who your true competition is. So it's what the customers use. If your customers don't know about your competitors, then in their worldview, they don't really exist, and it's an open playing field. So that's the point I want to drive there. So just by a little bit more about myself, I built many products. I've been an entrepreneur for over a decade now. Had products that have been hugely successful, products that have completely failed. And what I've learned along the way is, for me at least, the cycle time for going from idea to knowing whether I was going to kill an idea or actually persevere and make it grow was about 1.5 years to 2 years. And that was frankly too long. So I was counting the clock and I knew I was not getting younger. So I had to find faster ways to test ideas. And that's when I got into this Lean Startup, and some of the techniques there were all about fast iteration, fast learning. So as entrepreneurs, we all have ideas, but we, for some crazy reason, want to also act on all of them, and we don't have the time to do it. So this is a methodology that helps you quickly vet ideas and then be able to test and validate that there's something here worth committing years of your life to, which is typically what products take. So a few disclaimers. I'm very much of a first-hand experiential learner, so everything I'm going to show you here in the methodology is built on first-hand learning, either through my own products. I've been fortunate since I've started working on this to be able to work with entrepreneurs all over the globe, all different sizes, from one solo entrepreneur in a garage, sometimes in a day job, looking to take their big idea to the world, to big Fortune 500 companies like Amazon and Dell, Intel, that are beginning to pay attention to this and are looking at the years they have spent drowning millions of dollars in innovations that went nowhere, and they're at least willing to experiment. And there are definitely different cultural and company challenges, and so there's ways that we introduce this in a corporation that's very different than what we would do in a startup. But some of these bigger organizations are beginning to experiment with lean, and there are many companies that are beginning to apply it. Intuit is probably one of the forefronts. GE calls themselves a lean startup. They build jet engines using some of these techniques. So let's see what they look like. But before we go there, I'd like to just point out there is no magic bullet. There's no silver bullet. There's no guarantees of success. So what this methodology helps you do is not truly guarantee success, but what I can confidently say is that it helps to raise your odds of success. And the way it does it is by shortening those feedback loops. So rather than spending years to figure out you built something nobody wants, you can learn that sometimes in a day or a week or even a month, and that lets you course correct and not burn your resources prematurely. So one of the things that is very important also, if you are familiar with Lean Startup, is there are a lot of tactics. And all those are fine, but sometimes people just copy the tactics. Toyota actually has a great quote, which goes something to the likes of, people just copied our systems and processes and expected the same results without understanding the underlying thinking. And if you just take the tactics, you might get some mediocre results, but you will not maximize your true understanding and the true impact of these techniques. So I always encourage people to start with principles, and the tactics can really follow. So let's kind of get into how we do this. So just as a quick aside, I've written a book, and that book is 200 pages long of really tactical stuff. And I'm going to talk about the principles today, but tactics of how you interview customers, tactics of how you go out and do a lot of this kind of testing. Here in town, we're also partnered with Bomba Camp, and they run an innovation lab. So this might be something of interest if you want to explore how to take some of these practices to your organization. They run a very good boot camp here, which is a 5-week program and can be extended. But it's about taking that early idea and applying some of these techniques to see if it's really a problem worth solving, and then take it on from there. So let's get right in. So since we don't have a whole lot of time to go through all the tactics, I want to definitely share the core principles that underlie running lean and walk through each one of them. So let's start with the first one. So document your plan A. I mentioned how the plan A is going to change, but that doesn't mean you don't write it down. You still have to draw a line in the sand and document what that initial plan is. And the reason that that's important is because of this statement right here. And that is that as entrepreneurs, we are especially gifted at rationalizing anything. So we put our defenses on, and we can convince ourselves that we are always right. So whether we have good news, if we have good news, it validates our great vision, and we keep moving forward. If we see bad news, like nobody buying our product, well, we can always say people were on vacation last week, so that's why that didn't happen. So we can or the markets are down, so maybe people are depressed. Maybe it will pick up next week. So we can always rationalize those kinds of things. And what we want to instead do is bring objectivity into the process of entrepreneurship and turn it more into a science than an art. And that's really what this is about. So traditionally, we have used business plans for that purpose. We have used business plans to document that initial plan. So how many of you have written a business plan before? Can they show hands? Okay, and keep your hands up if you enjoy the process. So actually, there's one hand up left. So that's a very typical reaction. That business plan is not bad by itself. The problem is the format is all wrong. The people that make you write it typically want you to go and do this critical thinking, document your core assumptions, but they don't want to read it because it's a very hard document to read. Plus, behind the scenes, they also know that that's not going to be what's really going to work. It's going to change drastically, so they don't want to waste their time reading it, frankly. So they make you do the work, but they don't want to read it. They'll instead bring you to their office, ask for the 10-page slide deck or the 30-second elevator pitch. And so if you're going to have to distill it down anyways, and you're going to have to change it anyways, why don't you start with something that's a lot more useful? So there's a one-page business model format, which looks something like this. This is the Lean Canvas format that allows you to capture what would essentially go on a business plan down on a single page. The reason this is very powerful is that rather than taking weeks or months, you can do one of these in 20, 30 minutes. It captures your core assumptions down very, very quickly. you can begin to have conversations immediately with advisors, with your team members, with even investors. And because it's a single page, when they look at it, they can't help but have an opinion. Even if they say this will never work, you just ask them why it won't work, and you have a conversation which was way more meaningful than spending months creating a document that was a form of waste. Because you created this document, no one read it, you didn't learn anything as a result of it. So this is a great way of having that conversation. So this is the lean canvas. It is derived work off of the original business model canvas that some of you might be familiar with, that was created by Alex Osterwalder as part of his PhD in Switzerland. I made a few refinements to it, so I tend to be more problem-driven than the original canvas. I think is more strategic-driven, so it identifies key resources and key partners. For many people starting out, they don't have any of these things, so I'm more problem-driven. So I try to identify customers and their problems. If you're familiar with Clayton Christensen's Job to be Done, it's kind of aligned more with that kind of thinking. I have a longer blog post where I describe my motivations for making these changes, because I often get a lot of questions on that. So if you're interested, that's something to check out. Otherwise, you don't have to copy that link down. So the second meta principle, so the first meta principle was all about taking your big vision, your big idea, and decomposing it into its component pieces, which is nothing more than divide and conquer. So I was a technologist, and I still am. I'm a technical founder. And so to me, these meta principles come right out of building products. For me, the big epiphany was realizing that the business model is just like a product. In the past, I would build the product first, hope the business model would write itself, or it's something I would do in the future to raise money. But now I take a very different approach. Now I look at the business model as my product, and I actually architect and build and test it just like I would build my product. So in that, divide and conquer is the first technique that's applied. We take a big business plan, break it into these component one-page document pieces, and we can identify each one and work on it individually. The second meta principle is tackling what's riskiest, not what's easiest. So if you had a 6-month deadline and you were building something complicated, you wouldn't start with what's easy, because when month 4 and 5 comes around, you don't want to be surprised with something difficult. But we fail to forget, or we fail to do that with our businesses. So with our businesses also, sometimes the technology isn't the hard part. If you're building some kind of a web startup, give it enough time, money, and effort with open source, cloud computing, you can build that. That's not really the big question. The question is, if you build it, will there be customers? Will they pay you? Can you test that without building anything? And those are the questions you should be asking yourself. And so risk mitigation is fundamentally our jobs. I showed you how the entrepreneur's job is to really de-risk their business model over time. Everything here is a risk, so everything here is a guess. And it's not really, even though you write a business plan, even though you write a business model that might be backed by some Gartner report or some numbers, until you don't validate that outside the building, it's really at that point still a hypothesis. But there are different kinds of risks. So what we want to really do is identify them into groups. So that we have product risks on that canvas. These would be things like problem, solution, unique value propositions. Customer risk, who our customers are, how we reach them first at small scale, then at large scale. And then market risk, what are the business economics, the cost structure, revenue stream, how will we defend against competition? So you can begin to group those boxes on the canvas into these different categories. The other thing that's helpful is that all of those risks are uncertainties, but not all uncertainties are created equal. So they're going to morph over time. And so I like to look at the product evolution, the product life cycle in 3 stages. The first stage, when I get hit by an idea, when I have my shower moment or I get this great inspiration, for me the first thing is to ask myself, is this a problem worth solving? And there are ways that you can test this without building anything. So those are some of the tactical stuff. We can go and do customer observations, experiments. We can go and interview customers. We can go and show them mock-ups and screenshots and prototypes and get them to actually give us money sometimes just on the basis of making a big promise and saying, this is a demo of how I will solve it. If it's of interest, pay me. So on the last talk, we talked about crowdfunding. That's a great example. So services like Kickstarter allow you to put out a demo and raise money on the promise that if you fund this thing, one day this might be a reality, and people do that. And that same technique can be applied with our customers, even in enterprises. It's possible. So that's what this whole phase is about. It's about showing you have a problem worth solving, but also getting to that minimum viable product. So you might end up, say, in an enterprise world where you've got to build a product, people want to buy it, but it's going to take you 2 years to build. Well, there's probably something you can give them in 2 months. You can probably shrink it down and figure out what the must-have feature or must-have problem is, and shrink it down and start that conversation with customers. Remember, you want to involve customers throughout that product development cycle. So we're trying to do two things. One is show we have a problem worth solving, but two, define the smallest solution that we can build that delivers and captures customer value. So we want to be able to build that small thing and get it in their hands as quickly as possible. Once we have that small thing, we then start the next wave of learning. And here we're trying to ask, what do I need to do to fulfill my promise? So have I really built something that delivers value to customers? And if not, there's be a process of iteration there. So when you first launch, you're probably not going to hit the mark just right, because building products is very hard. And so there's a whole process of iteration there, but now you've got a minimum viable product that you are then building upon and learning from to get it to a point where it does deliver that value. Now, when you have enough people get value from your product and ideally pay you for it, you've got something that's working at small scale. You don't need hundreds and hundreds of people using your service. You just need a few customers to be able to get to that point. Once you can do it, your attention then turns into scaling the business model. So first deliver value and then scale, and not the other way around. So that's when we shift towards accelerating growth, and we go into that last stage, which is all about acquisition, referral, kind of the engines of growth of building your making your business model scale. So lastly, I want to touch on how you do some of this stuff, so what an experiment really is. So I've been using terms like hypothesis, and I said this stuff is based in the scientific method, and it truly is. Even the original Lean was very scientific. So the idea of an experiment is encapsulated by this picture, which was drawn by Eric Ries about 3 years ago, and it captures the iteration loop. So we start with an idea, we build something, and we want to build the smallest, fastest thing possible. So this doesn't have to be the full product. It can be a mock-up, a screenshot, a demo. We put that in front of customers. We measure their reaction, both qualitatively, either through an interview, or quantitatively through data and analytics. We take that data and we learn about customer behavior, and that fuels the loop again, over and over again. So in the traditional development cycle, we would just do one big loop. So we would go and do that requirements gathering. Those are the ideas. We'd build one big iteration, which might take 6 months or a year, and then we start measuring how customers react, only to find out that, gosh, we actually went off the rails and built something that was off the mark. So what we want to do is make these loops as small as possible, as fast as possible, and so speed is very important. At the end of every loop, we have to learn, and this learning is not about quality or about product. It's really about customer behavior. Every learning has to end in validated learning from how customers behave with what we put in front of them. And then finally, that loop is what drives the next wave of iteration. So that fuels the next ideas and the next hypotheses that we then go test. So another way of viewing this is that if you want to run an optimal experiment, if you want to make maximal progress, you have to have speed learning and focus. If you only have two of these things, then you're running suboptimally. So if you aren't learning, you're just executing a plan. So you're going very fast and you're focused, but you're not learning from customers. That's the traditional development cycle, and sometimes you just chase your tail. Because you launch a product, it's not what they wanted, so you go away for another few months, launch again, it's not what they wanted, and that's just you chasing your tail, not very optimal. If you're not going fast, but you're taking your time to learn and you're focused on the right things, that's a good thing. The only problem there is that you can be outpaced by competition, or you'll just run out of resources yourself because you're taking too long to get your product to market. And finally, if you're not focused on the right things, but you are learning and you are going fast, that's another trap we can easily fall into, and that's one of premature optimization. So before we launch our products, we might obsess about supporting 1 million users, but we should be so lucky to even have 1,000 users when we launch. Or if you're in a marketing department, you might be focused about or obsessed about optimizing your landing page conversions. But if you only have 100 visitors a day, there's going to be a point of diminishing returns. So you want to optimize just to a point and then move on to the next risky item and not go into this premature optimization trap. So you have to balance all three things to build that optimal learning loop. So finally, this is a visual of how this plays out. So on the left-hand side, I have the first meta principle, which is document your plan A. And I have a bunch of canvases here. And the reason I have that is that oftentimes we run into the trap of local maxima. So remember, what our job really is to find a business model that works. And from computer science, we know that when we go and use just search for optimal solutions, sometimes we actually get tunnel visioned and we might optimize a solution but only get to a local maximum or a hill while we fail to miss the big opportunity. So a good way to to overcome that is to not create just one business model, but create a bunch of variations. So for every idea, there are possibly many different customers, and just changing that customer segment can change the price, can change the channels, can change the entire business model. So playing with that is a good exercise. And I'm not talking about spending weeks or months. This can all be done in a day, maybe 2 days at most. But you can do a brainstorming session, come up with a lot of creative ideas, and right out the bat, rule out some of them because they were just really brainstorm ideas, but not things that you'd want to execute. But you might keep some of them in parallel that you then take to the next stage. So there you want to identify what's risky in these business model. Is it price? Is it the solution? Is it the channels? And let's start to run some experiments to test the feasibility of those types of assumptions. And then we go into the outside the building experiments where we then interact with customers. We try to understand the problems. We try to define our minimum viable product. We then test this at small scale and then finally at scale. And I show along the way how you might start with 3 canvases, but as you run your experiments, you have to eventually hone in on one business model. That's the one you want to take to scale. And you can certainly, once you have captured your early adopter market, then follow the Jeffrey Moore's Crossing the Chasm and all of this other body of work, try to go after mainstream markets, but that's kind of the follow-on story to this. But most people, again, should be so lucky to get to this point, and that's the point that I'm focusing on here. So that's all I have for you. If we have time for questions, I'd be happy to take them. Otherwise, thank you very much.